Let's now revise the chapter of deposits. Ideally, what is deposits? But before that, from where does this chapter come from? It is part of the chapter investment and loans, right? So, investment and loans ideally has two components according to our syllabus. One is the deposits, which is read in a separate chapter in company law, which is an altogether separate chapter, right? And has a very few sections starting from 73 to 76A. And other, we also have a topic about investments, which is a part, just a part of chapter that we discuss later, right? So, first of all, deposits. What do you mean by deposits? Any receipt of money. So, company, if it is receiving money in any form, whether you call it deposit, whether you call it loan, whether you call it any form, it will be treated as deposit. However, there are certain categories of receipt of money by a company which will not be treated as deposit. They are the categories prescribed in consultation with RBI. Okay. Like, basically, if you try to understand the gist of deposits, what is it? If company is receiving money in any form, it must be regulated. That is the main intention of law. Now, if company takes a bank loan, they have an agreement. So it is being regulated, right? So we have terms and conditions, and company cannot unnecessarily exploit the lender. Likewise, when you're issuing shares, and raising money from public, then you have proper regulations which are being made under company law. When you issue some securities which are listed, then listed, that is SEBI has made a lot of regulations with which you have to comply. So ultimately, it is important that all the receipt of money by companies should be regulated. However, there are certain unnamed category or receipt of money which remain unregulated because they do not have a name. So that leftover receipt of money, they are actually included in deposits. That means if I say if you receive amount from government, it's regulated by government. So not deposit. If it is through some foreign source, it is regulated by FEMA, RBI approval and all that. So it's not deposit. If it is from banks, it is not deposit. See, we have certain prescribed category of receipt of money, which are not deposit. So any type of loan, any type of instrument that you issue in accordance with RBI, you take some money from another company, you take some application money which you're bound to either refund or make an allotment in the same regard. If you receive money and you don't make any allotment within 60 days, it has to be refunded in next 15 days, right? If it is not done so, here the time limit is different. If it is not done so, then it will be treated as deposit. Otherwise, that money is not deposit. If you receive from your director of company or from relative of director of private company, it's not deposit. Secured convertible bonds, debentures, listed debentures. So unsecured debentures which are not listed are deposits. So unsecured debentures which are not listed, they are going to be treated as deposits, and you must comply with the provisions which are given for deposits. See, they basically prescribe that if you want to take money from anyone just like that, then you have to comply with certain requirements. That means you must return the money, you must give them proper offer, you must give them interest, right? Should be the minimum period, this should be the maximum period. All the terms and conditions are specified. Fine. If you receive amount from employee which just should not exceed your annual salary, and no interest should be there on that amount, right? If we hire someone, we might ask him to give a security deposit, which is non interest bearing. Then, if any amount is received just in trust, that you keep it, it belongs to me, but you keep it, non interest bearing. Then, as a part of your trade, advances, that means you have taken advance for supplying some goods, you've taken advance for selling the immovable property, you've taken advance, you have taken some security, just to be sure that the contract will be performed, right? You There is some amount that you receive from your customers in the form of warranty that you are going to provide for in future, or you have taken some advance for some publication. Publication means maybe magazine, journal, so they subscribe for it annually, so that is not deposit. Okay. If the money is received from the promoters, now sometimes if I am a company and I go to the bank and request them to give me loan, bank might say that you ask your promoters also to contribute. So banks have placed a condition that if your promoters contribute, then only I will pay the loan. So if the loan is brought by the promoters as a stipulation by bank, so till the bank loan is repaid, the promoters also have to pay that amount, and company cannot repay it back. So till that time, the amount received from the promoters will also be treated as will not be treated as deposits. After that, it will be treated chit fund, nidhi, CIS, not deposits. If the amount is received by startup, because startup companies need a lot of funding, so people invest in the startup, and if they have given at least 25 lakhs in a single tranche, um, which will be later on converted into equity, then that's not deposit. And if you receive from any of these funds which are registered with SEBI, that is alternate investment fund or venture capital funds, right, or real estate investment trust and all that, then it is not deposit. Okay. So company is the one who is receiving money, and there is someone else who is giving money to the company. That someone else is a depositor. That someone else or the depositor can be the member of the company or can be general public. But only an eligible public company is allowed to receive money from general public. Otherwise, all the companies, whether private or public, can receive these deposits from their members subject to the limit and conditions given in this chapter. Right? Okay. So, can deposit be accepted? Yes, by a private company from its members, by a public company from members, as well as public if it is eligible to do so, after complying with the provisions and conditions. Fine, ma'am. There are some types of companies which are absolutely exempted from these deposit provisions, but for obvious reasons. If it is a banking company, its core business is to accept deposits. We cannot place restrictions on deposits every now and then, right? So, banking companies, NBFC, HFC, that is housing finance, and other which may be specified in consultation with RBI, they are all exempted. Okay, so they can receive any money without complying to this chapter. Fine, ma'am. Now, firstly, section number 73. When you receive deposit from your members, what are the conditions that you have to comply with? First thing, call general meeting and pass ordinary resolution. So when your members permit, then you can accept deposits. Then you have to prepare a circular. What is preparing circular? It is nothing but like an offer document wherein all the details will be prepared. Okay. Then you also prepare a certificate that you have not done any default in repayment of any previous deposit or its interest thereon. File the circular with ROC, appoint a deposit trustee, execute a deed with them, and then issue the circular to members for inviting the deposits. Okay, once you've accepted the deposits, it's important that the deposits must be secured. So, creation of adequate security. And once you accept deposits, within 21 days, depository receipts should be issued to you. There should be a deposit repayment reserve which will be created. And whatever deposits are maturing in the following year before 30th April, 20% of the deposits which are maturing, you will transfer to that reserve, which will be used for repayment undoubtedly. And every year, a return of deposits is filed, that is DPT3, before 30th June with ROC. And it is very obvious that if you have accepted deposit for 2 years, after 2 years, you have to pay it. Whatever are your terms of interest, you have to pay accordingly. If there is failure, then the depositor can make an application to tribunal and tribunal can pass adequate orders. Fine. Now, there are some clauses which are not applicable to certain company. Now, the certain company I will explain you a little later. We'll revise little later. Fine. And this section also will revise little later. First of all, let's understand other aspects of deposits. Whether it's a private company or it's a public company, if it wants to receive deposits, the minimum tenure or the tenure has to be 6 months to 36 months. That is minimum 6 months, maximum 36 months. More than that is not allowed, and less than 3 months is also not allowed in any case. But less than 6 months but more than 3 months is allowed if you want it for your short term needs and the amount does not exceed 10% of paid up capital plus free reserves plus securities premium. Ma'am, is this the limit for normal deposits as well? The answer is no. This is the limit on deposits. If you are a private company and you fulfill certain criteria of exemption, that is this, then there is absolutely no limit on you. That means if you are a startup for 10 years, you're a private company which is not a associate or subsidiary and your borrowings are less than lower of 2 times of paid up capital or 50 crores and there is no default in repayment of deposits. Okay, so if you comply with these conditions, then there is absolutely no limit. If you fulfill the criteria of exemption, no limit. You can accept as many deposits as you want to. And for other types of private companies, 100% of your paid up capital plus free reserves plus securities premium. Okay. For public companies, you have to check whether you are eligible or not. If you are an eligible company, then you can receive from non-members also. In that case, from non-members up to 25%, from members up to 10%. If you are not an eligible company, then you have an overall limit. Okay. Now, if you are an eligible government company, then also this bifurcation is not there. Then also you have an overall 35% limit. Okay. Deposits can be accepted in the joint names also, but not exceeding 3. This can be a question of MCQ. And the rate of interest will not be more than the rate specified by RBI for NBFC. I hope that's clear. So these are the conditions of deposits. Now, how do you accept that deposit? If you want to accept it from members complying to that condition, follow section number 73. If you want to accept from general public, then follow section 76. Section 76 is nothing but a replica of section number 73 with slight addition. Okay. It actually gives reference to section number 73 only. So if you are an eligible company, only if you are an eligible company, all public companies are not allowed to receive deposits from general public. Only eligible public companies are. So they can accept deposits from public after complying with above conditions. So resolution, what is additional credit rating mandatory, and the circular will not be given to members because here you are giving offer to general public, so it will be issued in the form of an advertisement. So advertisement will be published in newspaper, on website, right? It also has validity, and thereafter the deposits will be accepted, charge will be created, deposit receipt will be issued, everything is the same. Then question is, who is an eligible company? If you are a public company and you have net worth of more than equal to 100 crore or turnover of more than equal to 500 crore plus, you get consent from your members. If you want to accept deposits within the limit of Section 180, consent can be a simple ordinary resolution, otherwise SR. So if these conditions are fulfilled, then you become an eligible company. And only an eligible public company is allowed to receive deposits from non-members or general public by following these provisions. Apart from that, deposit register will be maintained, which will contain all the details. It will be preserved for 8 years. It will be kept at the registered office. There are two disclosures which must be made in the financial statement: amount that you receive from directors, and in case of public company, an amount which you receive from directors as well as relative of directors in case of private company. You have to appoint a trustee for depositors. So before issuing any circular, you have to find a deposit trustee who is not disqualified, obtain his written consent, prepare a trust deed, file this trust deed also, and then issue the circular along with the statement that we have received the consent of the requisite person. He will discharge the duties which are prescribed. He can be removed before his term also, subject to following of conditions. Now, who is disqualified to become the deposit trustee? That means who cannot become deposit trustee? If you are a depositor, if you are a director or KMP or employee of company holding subsidiary associate, if you're indebted to company holding subsidiary associate or subsidiary of holding, if you have a material pecuniary relation, if you have given guarantee of some deposits, or if you're a relative of above. Okay. Of course, in the chapter of deposit, you have a lot of things which you have to learn. In case you haven't learned them yet, it will be difficult for you to connect with me at this pace. So, in case you don't remember these limits, you don't remember this tenure, you don't remember the flow, please learn it also. Then you will be able to revise well with me. Right? Okay, so then there is contravention, that if you contravene the chapter of deposit, then you have penalty on company as well as officer in default. And if the intention, if fraudulent intention is proved, then also liable under section 447, right?